Hello and good morning everybody, here with Martin Penneff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting with the US markets, basically the Dow and the NASDAQ are in continuation with their declines. 5 pips down for the Dow and 10 pips down for the NASDAQ. The Dixie Index is up just a little bit since yesterday. Yesterday, business optimism better than expected, economic optimism month on month better than expected, job openings as well better than expected. And then you have the Red Book Index in year on year, month on month lower than previous, both monthly budget statement worse than expected. We had a speech from Mr. Kocherlakota yesterday, who said that a rise in rates this year will only cause the FOMC to fall further short of its objectives. The USD Canadian, 13 pips down, USD Swiss franc, 46 pips up, 53 pips down against the Japanese yen. Today, we have the retail sales month on month, and then we have the MBA mortgage applications retail sales excluding autos month on month, business inventories, and another quite important, which is the FED's Beige Book reading. We also have the import and export price index month on month, year on year, and the 30-year bond auctions. Moving along to the European markets, the DAX 90 pips up, 220 range, going steadily up today. The CAC 40 30 pips up, 110 range, going up today as well. Euro dollar. Basically, the euro suffered yesterday. 55 pips down, 100 pips range yesterday versus the dollar versus the pound. 36 down, 70 range. The Australian dollar, 90 pips up, 130 range versus the loonie, 90 down, 140 range, and versus the Japanese yen, 130 pips down from 200 range. Versus the Swiss franc, little movement, 10 pips down. French and Italian inflation data for today, along with industrial production for the European zone, year on year and month on month. The real GDP growth from Germany and the European Union trade balance sheets are tomorrow, waiting to see the inflation data for Germany and the European Union as a whole this Friday. The UK markets, the UK inflation report yesterday has put the expectations for an interest rate hike this year in the ground. The reports show that the slowest inflation, this is the slowest inflation reading in 15 years. Not only that, but the PPI report showed a 2-year low indicating that the British economy is slowing down. Despite the negative data, the pound remained almost unchanged against the US dollar yesterday. The FTSE 100 gained another 30 pips yesterday and closed at 6,438. 10-year gilt yields fell to 1.51%. The JPY 90 pips down yesterday, 200 pips range. Another 145 pips down today already. Versus the Australian dollar, 60 pips down yesterday, 165 range, 180 pips up today already. Versus the loonie, 90 pips down yesterday, 110 range, 50 pips up today. We're waiting to see what Mr. Mark Carney has to say on his unscheduled speech later on today. And the CB leading economic index for November will show its measure for economic stability in the kingdom. Moving along to the Asian markets. In general, all of the main Asian Pacific indexes as a whole were pretty much ended in red yesterday. Declines all over without the New Zealand main 50 gross index. That was another 9-10 points up there. The NIKKEI, the Japanese index, had some action yesterday, but ended the day with little change. The index went down with 30 points during the Asian session during the night. The Economic Watchers survey has showed better outlooks for the regions in Japan, and the inflationary money supply index came as expected at 3.6%, while the machine tool orders has contracted just a little bit. The machinery orders year on year and month on month are scheduled for today with expected yearly expansion. The New Zealand electronic card retail sales index came out as expected with a slight positive change year to year. The house price index is due today in New Zealand. So basically, the New Zealand dollar versus the US dollar deleted 30 pips and another 35s already during the Asian session. The Aussie versus the dollar, 20 pips up and 80 down already. Moving along to commodities, the commodity trading S&P 500 index had a 50 pips range yesterday and is just below the 2000 mark today, extending the declines for the week. Gold held below the highest in almost 12 weeks as investors weighted the outlook for the global economy against the prospect for higher US rates. Silver fell from 1 month high. Gold had about $18 range, and then the silver had about 60 cents range. Yesterday went from 16.56 up to 17.2, now at 16.90. Oil fell for a fourth day, extending losses from the lowest close in more than 5.5 years, as the United Arab Emirates and Kuwait predicted a global supply glut will persist to at least the second half of 2015. Bank of America is now joining Goldman and Sachs Group, which say that WTI needs to remain near $40 during the first half of, to deter the investment in new supplies, which would add to the glut. The WTI had $2.60 range yesterday, now at around 45.35 per barrel. An interesting point here would be to mention that in a recent discovery, it's shown that the OPEC countries are not cutting the production simply because if the oil goes even to $20 per barrel, they wouldn't mind. But the US production facilities are going into a little bit of a crisis. They would suffer as long as the price goes below $40 per barrel in terms of production costs. So have that in mind, all of you commodity traders out there. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.